What the hell's going on, YouTubers? I want to show you guys a goal that I've been waiting to hit. About 2 or 3 months ago, I might have written, uh, showed you guys a video about how I'm making about $200 a month in dividend income, or passive income, as some of you may call it. What I'd like to say and show to you guys today is how in the rolling 12 months ahead, so if I were to look forward 12 months, my income would be getting approximately $300 per month. I did that by investing several thousands of dollars that I've gotten over the past couple months into decent dividend paying stocks like Royal Dutch Shell, Cyrus One, which is a cloud data storage company, WP Carey, which is a triple net lease company, as well as well, the other name is slipping my mind here, but so what does that mean? So that means that currently, if you were to look in the rest of 2017, I'd be getting approximately $3,100 to $3,200 in passive income this year. I'll show you guys probably what I've already gotten this year, and essentially what I'm forecasting to get for the rest of the year. But what that really means, and hopefully for me, is in 2018, when you look ahead, I'm looking at essentially get $3,600, and for the 12 months, that's about $300 per month. So luckily for me, I've hit one of my goals this year, but that was a rolling 12-month goal. My actual goal for the year is to come in with about $3,600 in 2017. So that means I'm off by about $450. So that means that I still have a significant chunk of change that I need to invest in order to hit that goal. So I'll keep you guys posted on that throughout the year. But I kind of wanted to show you some of the items that I've gone through and really look at April's actual income and what I've actually made to date this year. But before I do that, I kind of wanted to show you, what this is actually kind of looking like. So I believe in March or April, I showed you guys really what kind of actual positions I have and what they're looking like. But so far this year, my projected income is up 50%, 56% from 2016. And what that means in a monthly average per an increase in monthly income is about $94. And what that means in total dollars per month for 2017 looking forward is $260. Now, like I said, since I'm up to 3,600 rolling 12-month average, I won't be able to get that $300 a month until 2018 unless I continue to invest in 2017. So much so that I'd probably be getting on like the rolling $4,200, $4,300 range. So I'd have to make up that extra $450, and I only have half the year left, right? So I'd have to be getting another $900 or so in income for half the year to get that and make up for that. But like I said, extremely happy that I hit this target, especially decently early at 25 years old. Definitely looking forward to the fact that that will then compound on itself, giving me a couple extra dollars per month. But really what I kind of wanted to show you guys is what this is kind of rolling into. So if you kind of look at what I've gotten so far this year, I just totalized my April 2017 income, and so for my individual brokerage account, I got $87. For my Roth IRA, I got $140. For my computer share account, mostly from tobacco stocks, I got the $31. And then, of course, I lost my password to my share owner online, so there's probably some amount that for my Realty Income Corp that it's probably more than 84 cents at this point because I reinvest the 84 cents. And then I also have McCormick and General Mills, as well as Procter and Gamble in there. But anyway, they're generally pretty small positions. It's probably less than $500. So at most, it's probably just tens of dollars that it's accounting up for. So if you take into account the 260 that I made in April, the great month that I had in March, the $400 that I got in March, the 130 that I got in February, and the 126 that I got in January, I'm up to $922. So I wish I could say that I could times that by 4 and get the $3,600 or $300 in passive income a month that I want. But one of my biggest accounts that I have is about $100 or 100 shares, I'm sorry, of BHP or BBL, which I believe pays in March. So they pay semi-annually. So that being said, that $91 won't show up in 2Q, but it'll show up again in 3Q. And hopefully it's more than that. They changed to a 40% payout ratio. So luckily for me, they went from, I think it was like 21 cents per half to 80 cents this most recent half because I think iron prices went up, like almost doubled or something. And then oil prices also helped as well over the past 6 or 7 months. So I'm hoping that this continues to go up. I actually am not angry about the 40% payout ratio because that means if the company does extremely well 1 quarter or 1 half year, you're going to reap the benefits of it and get a 40% payout. But I completely understand on a consistency standpoint and for a company or someone that's retired and needs this income now, it might be hard because it's such a cyclical stock. But for someone like me who's only 25, I'll ride it out. Some days I'll probably get $0 in income from BHP, and then other days or other payouts I'll probably get 80 to $100. That's perfectly fine with me for the time being. So that's really all I wanted to share with you guys is that I hit my goal of about $300 a month looking forward, and that's of course not taking into account that something might get cut, dividend raises, or anything like that. Like I said, we're only the first couple days into May here, so we really still have 7 total months to go. So many things can happen, but like I said, the $3,600 that I want to get in 2017 isn't far off, and my next goal is probably to get to 4,000 and by the this is a good one. I'm gonna think of this one off the top of my head. Let's see. Well, let's go back to this. So I got 71% in 2016. It's already May, and I'm up to 56% increase from last year, 2016. Just rolling through 2018 because I'll get the full year's dividend payments. I'm already up 15% in 2018 compared to where I am in 2017. I don't know, guys. I'm at least gonna try to beat this 71% for 2016. I might not get there. Majority of my bonus and whatnot have already been invested. But I'll have some other things. Like I'm gonna pay off my car this year, so that's a couple $100 a month that I'm gonna be able to readily invest. So if you take a rule of thumb, let's say it's 4 to 5%, you're looking at $20 to $25 extra per year in annual increases. I don't know. I'll at least beat the 71% dividend growth. But if you think about it, I mean, if I continue on this, I think I've talked to you guys about this before, that even an increase of 20% in dividend income per year, I mean, in a couple of years, you're just going to be snowballed and it's going to be massive, right? Maybe I'll do a video on that for you guys. Like you could start off with $1,000, a month, like where I was let's say in like 2015, and just say, well, what if you increase it 20% per year? Modest, right? I mean, um, I increased it 71% in 16, and so far, um, in 2 years I've increased it. I don't know. You guys know I'm not good at math. Let's do this real quick. Looks like over 180%, 167%. So in 2 years, I've increased my income 167%. So, I mean, if you were to say 20% per year, you'd increase it, I don't know, 40% or something, 45% along those lines. Let's just do it. 1 times 1.2, and that times 1.2, 44%. Probably could have done that in my head, but like I said, I'm not that great with math, but I am great with spreadsheets. So that's all I really had to share with you guys today. Another cool thing that I created was this thing, which I'm probably more proud of than I should be, considering that I'm so heavily weighted in energy. But that's another topic for a different day. I'll show you guys that maybe in a different video. Maybe I'll show you how to set this up. It was actually relatively simple after kind of looking at it and looking up how to essentially do it through Google. But anyway, hope you guys enjoyed the video. Like and subscribe, and see your comments below. Like I said, I always try to, or didn't say this already, but if you look at my comments, I generally try to respond to each and every one of you, and I appreciate your guys' comments, especially some people yesterday who were telling me about some Canadian stocks that I've been trying to get my dabble on with some of the Canadian financial stocks, so I really appreciate you guys giving me a heads up on some of the higher yielders. Some of the people that have wrote comments, though, they tell me about these dividend stocks that are paying like 17, 18%, and I'm like, oh, that's not for me. I'm generally into the more high quality dividend payers, but sometimes I take a little risk. Like, took a risk in buying 100 or so shares of Shell recently, and dividend might get cut partially, it might stay, but I invested at about 7%, so we'll see. Hopefully it works out for me. My yield on cost is at least 7%. And so any reinvestment that I get from that is only going to go up. So, but all right, guys, like I said, I kind of went off on another minute tangent there, but appreciate you guys stopping by the channel and look forward to hearing you guys' thoughts and comments down below. Have a good night.